Good afternoon. We're going to wait a couple of minutes just to wait for a few more people to join. We are looking at about 180 people have joined so far out of a total of 300. So we're going to wait a couple of minutes just to allow those people to join who are trying to, but we'll be starting very shortly. Well, good afternoon. Welcome to the first of the ETOA webinars on the current COVID-19 crisis. I don't think any of us need to rehearse what has happened to the tourism industry in Europe over the last month, nor do we need to dwell too much on what's happening to the businesses in Europe over the last month. I think the crisis has affected every part of the supply chain in tourism, and I don't think there is a supplier nor an intermediary who isn't drastically affected by the current situation. We've gathered together just to look at the situation in the UK. I hasten to this webinar is the first in a series of webinars we're going to be having on a number of topics. We're going to be covering the situation in Spain on Wednesday afternoon, and details about that can be found on our website. But to look at the situation in the UK, I'm absolutely delighted that we've been able to gather a group of experts together who are very much leaders in their field. We have Jonathan Wall from Elman who's going to talk about the general regulatory situation or the general points, concessions being made by the government to support business. We've got our quasi-resident indirect tax expert, David Bennett, to talk about what the VAT situation is. And we've got Neil Baylis, a partner at Mishcon Reya, who has been talking on tourism law with ETOA for the best part of 15 years. And I've got Kurt Jansen, who's the person running the Tourism Alliance, involved in the lobbying on behalf of the industry to government. I'm going to take questions. If you've got questions, please type them in. You've got a question field on the sidebar of your webinar access. Otherwise, sit back and watch. This webinar is being recorded. It will be made available later on. But if you've got questions, please let me know them. I'm going to hand you straight over to Jonathan to take off. Jonathan, please.
Thank you very much, Tom. I hope everyone is all well and safe at home. I'm going to take you through some of the new, but I guess not quite so new over the last 2 weeks, government initiatives to help businesses get through what hopefully is a fairly limited period of time. But I guess that's the great unknown, is none of us know when this is going to end and how deep it's going to go. So the first thing I'm going to look at is HMRC's time to pay service. Excuse me. This is possibly one of the most effective areas at your disposal at the moment. I think, and you'll see as this goes through, that it's easier to stop money going out your bank account than it is to get new money coming into your bank account at the moment. So this has always been in existence from HMRC, but really ramped up because of coronavirus. And if you haven't seen the phone number, it's on screen. You might want to write that down, which is 0800 024 1222. Government originally announced there were thousands of HMRC operatives trained up to answer your calls, and they worked out that they were all within 2 meters of each other, so they've had to socially distance them, and there's far less. So we are hearing of some people having a lot of problems getting through, but others who've got through literally on the first ring. And what you've got is fairly junior members of HMRC's staff there. But the good bit is that there's pretty much an automatic deferral. If you call them and go, it's Elman Wall Limited, or you can tell them it's Elman Wall Limited, but in my case, it's Elman Wall Limited. We're not going to be paying our PAY for the next couple of months because of Corona. They're going to go, yeah, that's fine. And you want them to note that down so that the systems aren't showing, you just simply haven't paid. So I think pretty much everybody will want to be deferring their payroll-based taxes for the next couple of months. If you have a July, August or September year end in your company, then corporation tax is due 9 months after that. So that means the tax payment is due over the next few months. And again, you shouldn't have too much problem in deferring your tax liabilities. So I think for many of you, that's going to be an easy way of retaining cash within your business to use on what's basically more important things that need your attention, I guess. So all of you should be doing that. As my colleague David will explain in a minute, that's not necessary for VAT because that deferral is automatic. Excuse me. So if you can move on to the next slide, please. No, that's the end, I think. If you go back to next one. No, keep going then. Yeah, okay, that will do. No, back one. You can see I'm not controlling my own slides here. It's all live. So the next one, it affects anybody that fills in a self-assessment tax return. As you will know that you pay your tax January each year, but there's also a payment on account on the January 31st deadline as well, but also a second payment on account at 31st July. That has automatically been deferred to next January, so January 21, with no penalty for deferring. Applies totally automatically, so you don't need to contact HMRC to deal with it. Simply the payment you're due to make at 31st Jan will get rolled over. Sorry, 31st July will get rolled over into next January's tax payments. So again, at July, that could be helpful for a lot of you who do fill in self-assessment tax return. Okay, moving on. Okay, so this will affect some of you and some of you, I guess it won't, because you need to be on an approved list, if you like, of industries where you're going to get the support. There's two different types of support. The first is 100% business rates holiday for the tax year that started yesterday, or today, actually, 6th of April. If you are in a qualifying business, doesn't matter what size that business is, but you pay rates, you will get a 100% business rates holiday. It's being applied by local authorities, and what should happen is they just automatically amend your rates payment to nil for the next year. So you shouldn't, again, people shouldn't need to do anything at all. The only thing you need to do is just make sure, I guess, you're on the local authority list. It's pretty easy to find on the web the amended guidance given by government, but this relief is generally meant for largely customer-facing businesses like bars, clubs, travel agencies, so the shops side of things, shops which have been shut because they're not selling essential items. The expanded list does cover visitor attractions and museums and the like. Grey area, well, probably quite unlikely tour operators under the current guidance are included, but my understanding is the guidance could come out that could bring tour operators in. Travel management companies don't seem to be in it, but retail travel agents are. So effectively, I think you either need to wait to see if your council approaches you, or you go onto their website and there's a very simple application for most. And if they're not, you might want to just try and plead your case. But again, it should be automatic, and this 100% relief should be given, and wait for further guidance as to whether your leisure business, industry, hospitality business will get covered. So it is on a prescribed list at the moment, and and if you're not in the list, you won't get this relief. But so we need to see what happens. Okay, if we can flip, please. So there's two other linked reliefs available to those paying rates. These are grants, so not money you need to pay back. But as you can see, if you have a business with a rateable value under £15,000, so that's probably a fairly small shop or leisure business, you'll get a £10,000 grant. If your rateable value is between £15,000 and £51,000, then you're going to get a £25,000 grant. And if you have a business with a rateable value over £51,000, unfortunately, you don't get anything. You can find your rateable value from your rates bill that you receive and should have just probably received in the last few weeks. Each year, your rateable value will be on that, and there's a multiplier that takes it down to the amount you actually pay in rates. Again, these schemes should be fairly automatic. The local authorities are administering them from data that they already hold. So I guess in a perfect world, all you need to do is contact your local authority if you don't hear from them, or you're not on the list, if you like. So it's more by silence rather than you receive something, and see if you can be made a payment. But it should be that they'll contact you or ask you to apply if this is relevant to you. I think there's a lack of consistency amongst local authorities at the moment. Some are saying different things and applying different criteria, but as time goes on, I'm sure that will standardise. And we are seeing some local authorities either promising to make payments in the very near future, or they are actually making payments. And again, that's changing local authority to local authority. Some are ready, some aren't ready. My understanding is government have funded the local authorities to be able to make these payments, so it's more a matter of their own process. So if you do qualify, they're obviously nice to have. Okay, if we can move on. So where everyone seems to be asking about, and there's most questions about, and most people are becoming much more familiar with, is the job retention scheme. I'm not a lawyer, I'm not an HR advisor. I can only sort of tell you what we're hearing, what we're seeing, and on the tax side of things. But everyone's now becoming familiar with the word furlough, which had no UK legal concept till the Chancellor talked about it 2 weeks ago. But effectively, any UK company with a UK bank account and a UK PAYE scheme that had employees at the end of February can lay people off so that they can do no work whatsoever and effectively not make them redundant, but ask them to stay at home but do absolutely no work whatsoever for the company themselves. And the way this works, I'm going to give you a couple of examples in a second, is in basic terms, HMRC will reimburse 80% of someone's salary up to a maximum of £2,500 per person per month. I think this was originally designed for, if you like, large groups with thousands of fairly low-paid, low-skilled employees who couldn't work because the shop shut, the restaurant shut, and they're like just sat there and can't do anything. So this scheme protects them, if you like. It's much more complicated in SME businesses like all of ours, where some people have got work to do, some people haven't got work to do. Directors are looking at their own position, and it becomes much more complicated. Government did release last week further details regarding the furlough workers scheme, and in fact over the weekend, over the weekend further details were announced, which I haven't put into the slides, but again you can find it fairly easily. They do give more detail. Still loads more questions and answers. We don't know everything yet.
Well, yeah, but you don't have to do all 30.
HMRC are basically currently building a new system that, if you think almost every employer in the country is going to go onto this system. Once it comes live later in April, load in their furloughed workers' details, and then expect the relevant amount of money to come back into a company. It's just hard to see that's going to happen without some kind of system blip. So it may well be that all of you are going to have to pay your staff, it's whether furloughed or not, April's salaries, and it may be till May that you actually get reimbursement for March and also
because you just showed your screen.
So there may well be a cash flow crunch around that. The scheme itself has been announced to run for 3 months starting from 1st of March. The government made quite clear that is extendable. So I've got 2 examples if you want to turn on the first one.
Hold on, I'm going to turn this guy off. He's doing what he's speaking.
Excuse me, can everyone listening to this webinar make sure they're on mute?
They've got their microphones muted because there is someone we can hear talking in the background. Okay, if you can turn the slide, please, Aaron. Okay, so the first example covers somebody that is employed less than the £2,500 a month maximum. So Mr. A gets salary of £24,000, that's £2,000 a month. Let's forget pension contributions at the moment, but actually government will fund the minimum of 3% employers' workplace pensions. So what effectively happens here is that the person sort of still gets, the employee gets net pay from their gross, so PAYE national insurance is deducted as normal. There's employers' NI on it, which government will pay for. So the grant, and again, it's a grant, it's not a deferral, government is actually giving you money to keep this person on the books, is the lower of 80% of their salary, which in this case is £2,000, and the maximum of £2,500. So in this case, it will be 80% of the salary. So once this great portal that we know nothing about yet, so there will be further rules coming out from government, the company will claim back from government £1,600, which is the 80% of 2,000 plus the employer's NI, and then what you pay your employee is up to you as long as you agree with them. There's no obligation to pay more than 80% of the salary, but it's basically down to contract and agreement, whether you pay them 80%, 100%, or whatever. So you're paying the employee £2,000 less tax, if you like, and you're claiming back 80% of that, and also the employer's NI and pension contribution. Okay, so if we flip back to example 2, I think you just did that. Okay, so Mrs. B is higher paid than Mr. A. She gets a salary of £42,000. That's £3,500 a month. Exactly the same process goes through, except in this case, her 80% salary of 2,800 is greater than the 2,500 cap. So in which case, the company claims the grant at the maximum level, which is 2,500, not what her salary is. It's at the maximum plus the employer's NI. And again, depending on what the company arranges with the employee, Mrs. B is either going to get paid 3,500, which is a full salary, or 80% of that. And you're going to get £2,500 back. Okay. So just to make clear, sorry, I think for most employees, they can pay the employer up to £2,500, so there shouldn't be a net difference. So in this case, there's 3 options, if you like, not to. So it's the 80%, 100%, or the 2,500. Okay. So just moving on just a little bit more on the scheme. If you turn over the slide, please. Okay, so what you need to do, and many people have already done, is designate their employees as furloughed. Your HR people, employment lawyers can help you with that. There's lots of template letters. Hopefully most employers have worked out that they need to be open, transparent, honest with staff, and that's how they'll get maximum buy-in on their staff. But you do need to actually designate these employees as furloughed. As we said before, they can't do any work whatsoever for the company. And then when the portal's open, they need to register the details of that employee through the portal. They need to have their own bank details on it so HMRC can repay it. If you think about it, government has to reverse engineer the entire taxpayer scheme effectively, where taxpayers, instead of paying money to HMRC, are receiving money back. So all the refund side of things does need to be built. The payment cycles do need to be built. Directors of their own companies seem to be a little bit in the grey area at the moment. We're getting more guidance. It appears today, from the information released over the weekend, the government are accepting that SME directors can be furloughed, and they can do sort of admin and statutory work for the company. For example, to be able to file the company's accounts is a statutory requirement, and that doesn't include in sort of revenue generating work that they wouldn't be able to do by being furloughed. I think there's still more guidance that does need to come out from government, and it's coming a little bit piecemeal. There's been 3 announcements so far, and I'm sure there'll be more. So I guess narrowing down the amounts of uncertainties as government's working through various scenarios. There can be some really complex aspects here on certain employees. The example we just put on the slides is key employees, directors with EMI share options who are meant to be working for the company, and how does furlough interact with that? So just to show it can get really complex. Furlough periods are 3 weeks, and there's effectively a rolling 3-week cycle each time that you furlough someone, or you can bring them back and you can re-furlough and the like. And again, all this guidance is very easy to find if you just sort of Google job retention scheme and government or whatever, you'll find very, very easily, and there's lots of commentary out there now. So a lot of this isn't really new, and I think most people reading this will now be familiar at least with the basics, but everyone does have their own individual question and individual query that they want clarification on. It's one of those, by the time we all get all the answers, this will be over and done with, I hope. Okay, so moving on to the self-employed scheme. If you could turn the slides, please, Aaron. Okay, so if you're self-employed, this was left out originally by the Chancellor, basically because it's so difficult to get data and to work out how to support self-employed people. But what we have is a scheme where it's going to support the majority, where the majority of income comes from self-employment. So if you have a self-employed business but you earn £100,000 as under PAYE as well, then that's not what the scheme's intended for. So it's not meant to be for both and all-encompassing. You have to have completed a tax return for the year ended 5th April 2019, which obviously starts as the tax year that started April 18. So if you started self-employment like this time last year, April 2019, you won't be included in the scheme because the revenue have got no information from you, because none of the tax years that ended yesterday have got tax information submitted to HMRC. So if you're newly self-employed, this isn't going to work for you, I'm afraid. If you filed your tax return for last year late, and I remind you that tax return should have been filed by the end of January, the Chancellor's given a window of 4 weeks from his announcement, so about 2.5 weeks more to get your tax return in and to take part in this scheme. This is only available for people with a profit. The Chancellor uses number of £50,000. I think he said 90% of self-employed people have got income of profits of up to £50,000, and then it was something like, and everyone else earns over £200,000. So we've kind of got everybody apart from the very wealthy, which I'm not sure is right. There's nothing logical about that, because the scheme pays out 80% of average monthly profits for the last 3 years up to £2,500. If you gross that £2,500 up, that equates to someone that's making £37,500 a year average profit. So not really sure where that £50,000 number came from. So just to repeat, it's similar to the job retention scheme for employees. HMRC will give a grant, so you don't have to pay that back, of 80% of average monthly profits of the last 3 years. You can work that out, but the revenue will have that data, and that's why they've set the scheme up this way, capped at £2,500 a month, running from initial 3 months. But as we said before, the government's got to build the job retention scheme portal, so they can't really move on to that, to the self-employed scheme, until that's up and running. So they've said that it won't be available to June, so you're not going to get any money until the end of June if you're self-employed. So you just got to, I'm not sure that's going to help you cash flow wise over the next couple of months, and it will be taxable income. The flip side of that is the Chancellor's basically saying self-employed have had too many expenses they've been allowed, and you pay less national insurance than an employee. So if we give you this, we're expecting to claw back some of that difference. So expect, once this is all over and done with, that self-employed will be slightly less generous in what they get, and probably closer looking to what an employed person makes. The gap, according to the government, the gap between you receiving income in June and now is you can apply for universal credit, and I think there's normally a 5-week application period before you get any payments, which apparently is being fast-tracked. And you probably read in the media last week that applications for universal credit went up something like 900% in the last week. They normally get, I think there's 100,000 people and had 1 million applications in the last week. So everyone does need support. So self-employed are having a support scheme of sorts, but it's not going to kick in for a while. Okay, moving across, please. Next slide. So move on to the banking side. Again, many of you will have already applied through your banks for CBILS, the Coronavirus Business Interruption Loan Scheme. The Chancellor's made a big play of it. I don't think the banking industry had a clue what he was going to say when he made those comments. And over the last couple of weeks have been playing catch up, if you like. The banks also, or some of the banks also put quite a lot of restriction on the scheme on day one. It's like the government's giving the banks money, the banks aren't giving the people money. The government want the people to have the money, and the banks are going, but we've got to apply banking criteria to this, and we don't want these people to have the money. And politically, mainstream media, there's been a huge amount of pressure on the banks to effectively try and ensure that cash is going to find its way through the system to companies that desperately need it. And we're seeing signs of banks relaxing their policies. Barclays, for example, started by saying anything under £250,000 loan needs a full personal guarantee from the directors. How can any director give a personal guarantee when you've got those key factors of don't know how long it's going to last for, don't know how long it's going to, how deep it's going to cut, would come in. They've been forced to lift that. The banks are still applying non-standardized terms. So I'm getting probably a third of the emails I'm getting from my clients at the moment is about conversations they've had with their banks, and there is a lack of consistency. I think the banks have got more desire to lend than they did, but it's still a work in progress. And I think week by week, it will become easier. You've also got to appreciate that the banks have also got problems around workers and people working from home and isolation. And people working too closely together, so it's difficult for them to actually to make these loans happening. Effectively, for loans being made, the government will fund or pay the interest in the first 12 months. There are fairly commercial interest rates after that. Bear in mind, base rate is fractionally above zero. These aren't cheap loans. We're seeing quite expensive rates being shown, and the more marginal the bank, the higher the interest rates can be. The CBILS loan is based on businesses with turnover up to £45 million per year, and they've got to be what's come down to a more relaxed criteria is they are all viable. So if you were a loss-making business for the last couple of years, I think you would be quite unlikely to get this loan from the government, because they'll say you haven't been viable. The announcement made last week, the end of last week, also brought in a loan scheme for those companies between 45 million and 500 million, where there is a small guarantee required from directors, but basically bringing that size business into the support structure, if you like, and very large businesses, excuse me, with over 500 million turnover, effectively have their own scheme, which is almost one-on-one with the Bank of England. So most small businesses should be able to apply for Corona Large Business Interruption Loan Scheme. It's very nattily named, but they're having problems with the application process. The first we had in our client base, the first one approved at the end of last week, which was £200,000 from NatWest. So they're beginning to come through, but there's tens of thousands at application stage, and companies aren't really getting a lot of support just yet. If we can flip the slide, please. Okay, as we said, first 12 months interest free. You've got to look at it as Corona first. So, for example, my business, which is a very viable accountancy firm, my problem isn't work drying up. Far from it. We are as busy as we've ever been. Our issue is, are we still going to have clients at the end of it, and are we going to have clients that are able to pay us at the end of it? So it's clear that our financial issues are simply that cash cycle of getting paid for the work we're doing. So we can clearly demonstrate the support we'd need. Some of you may have more difficulty to be able to do that. Just to remind you that CBILS isn't the only banking scheme out there. They've all the main banks have got their existing overdraft and loan arrangements that they are willing to offer or not willing to offer. There's lots of stories in the media, and again from our own client base, where banks have gone, no, you're not going to get CBILS, but we will lend you this on these terms, and the terms are fairly horrendous, but what can you do? Again, in our own instance, I spoke to my bank manager, and we very easily just organised what they call a temporary overdraft, and I think that was free of fees, because it was temporary and came into one of their schemes. So there was nothing to do with loans. It was simply some just working capital support. So if you have a personal bank manager, definitely good to talk to. If you're in a call centre, I think that's where the problems are, because the banks really can't respond to you, to questions or whatever. They've all the main banks have got their online pages set up and applications, and they're trying to automate it as much as possible. I think the real issue is if Barclays or NatWest, whoever your banker is, don't want to support you, going to another bank just seems to be all but impossible for two reasons. One, some of you will know how difficult it is to open a bank account in the UK anyway at the moment with Know Your Client anti-money laundering provisions. That's not going to happen anytime soon. And I think they are swamped with their own clients, so banks don't really seem to be open to new businesses. The British Business Bank, who are administering this whole thing, have a list of 40 lenders. So, but once you get away from the household names, I'm not sure that many are actually really set up for new business and those they are offering. Some of the smaller lenders, or what they call more specialised lenders, are at quite penal rates, so it may not be business that you want. Okay, if we can turn to the next slide. I'm trying to absolutely whistle, stop going through these and go as quick as possible. Just very quickly, SSP, statutory sick pay, has been relaxed. Government will effectively pay SSP for anybody that actually is affected for coronavirus for 2 weeks, and that's from their first day that they go on to sick pay rather than the company paying it. Again, lots of details on the government's websites, but just be aware of that. And I think we're just going to cover one more slide, if we can turn. Just some odds and sods just to round up with that. Personally, if you've got a mortgage at home, most of your lenders will pretty easily give you a 3-month holiday. I think that means that the amount you should have paid gets added onto the loan. But at least it will reduce your cash flow for a couple of months to give you some personal support. When it comes to property, all our property clients are telling us that not that many their tenants paid full rent, if any rent, on the 25th March quarter day. So I think landlords are getting a little bit of a beating. Some can afford it and some can't. But there is legislation to stop a landlord evicting you if you haven't paid your rent or you're in default over this 3-month period. You should be looking at talking to your landlords about at least spreading payments rather than paying 3 months up front. To go, in our case, we've agreed with our landlord just to go monthly, just to ease the immediate cash flow request. But I think landlords are becoming a little bit of treated as lenders by their clients. Really important point on the Insolvency Act. A lot of our clients, a lot of directors are worried as they're trying to save their businesses and keep their business afloat, what will happen to them, because insolvency law is quite strong, especially around directors' actions in a period where they can't really pay their debts as and when they fall due. And Neil might cover this in a bit more detail, but that effectively that section has been of the Insolvency Act has been suspended, so that you can do what you can to save your business and not worry about the personal liability from 1st March for 3 months that would have arisen from that. That doesn't mean you can be fraudulent and expect to get away from it. I think it's just a sensibility check as opposed to just suspending the act totally. And just my very final point, just to remind you that deferrals aren't grants. No one's giving you your VAT for 3 months, or you don't have to pay your personal tax. You've got to factor in your recovery plans, how you are going to pay this back. And I think the insolvency practitioners are quite quiet at the moment because I think it's very obvious the government wants businesses to survive. 6 to 9 months' time, when you've got an awful lot of tax debt to pay, I think the insolvency guys think they're going to be in for a very, very busy time. So just do think about how you're going to pay for your deferrals. And I know, so I've tried to cover an awful lot in a very short period of time. I'm going to pass you back to Tom. Hopefully that was helpful.
John, thank you. Thank you so much. You covered an awful lot of ground in some time. I'm really grateful. That was very exhaustive. I'm going to try out and free time for questions at the end because I know we've got a very crowded program today. I'm going to hand it straight over to Neil Baylis of Mishcon Reya, who is going to take us through some of the legal issues surrounding the current crisis. Neil, please.
Thanks, Tom. Hopefully you can all hear me. Good afternoon, everyone. Welcome to this event. As Tom mentioned, I've been advising clients in the sector for about 15 years, and this is certainly a unique situation we found ourselves to be in, and we're certainly hoping that we can encourage each other, support each other through these difficult times. There are obviously a number of legal issues being raised by the crisis. given the amount of time we've got, and given that Jonathan's covered quite a few of these issues in his talk already, I'm going to spend most of my time just talking about the key issue, which is that of refunds. And most of the questions I've been getting from clients have been based around this sort of very pressing cash flow issue that clearly is raising a lot of concerns for people. So just briefly running through the background quickly, I mean, I'm sure you're familiar with this. I mean, we had the case in China in December 19. No one really knew at that stage how quickly it was going to develop. Things really kicked off legally and politically, I think, in March. So 16th of March, we had the European Commission recommend a 30-day ban on all non-essential travel into the EU, and effectively all EU and EFTA countries have now responded to that recommendation, except for Ireland. The next day, the UK government, via the FCO, advised against all non-essential travel for UK citizens for 30 days. So effectively, that was in response to the EU Commission's position. So that effectively set in train the process of cancellations. The next day, we had some guidance from the European Commission under the various denied passenger boarding rights, so covering air, rail, sea, and bus and coach travel. Really not changing the law, but reiterating or confirming that where companies had to reroute or find alternative travel, that could be for a period in excess of weeks or months even, and that would still be compliant with the law. So it's giving some assurance to companies there they weren't obliged to find some sort of emergency transport for people who had booked tickets. Then the next day, 19th, the Commission issued its temporary framework for state aid in light of the COVID-19 situation, and there have been a plethora of schemes coming in from all the EU member states to support various business sectors. We've seen hospitality measures that Jonathan referred to in the UK, and there have been a number of schemes specifically aimed at the travel sector coming from various countries. That same day, the Commission issued guidance in relation to the Package Travel Directive, which is what I'm going to focus on quickly now. So just a quick refresher. As you know, the directive, which was implemented in the UK under the Package Travel Regulations 2018, effectively allows for organisers to cancel without penalty a package where there's unavoidable and extraordinary circumstances. And customers can also cancel on those same grounds where they can show that those circumstances are going to significantly affect the performance of the package or travel to their destination. And effectively, it's acknowledged that a national no travel advice from a national body such as the FCO will trigger that requirement. There is a very helpful web page on the EC Europa site setting out all the different measures that each of the member states has introduced. So where either of those circumstances apply, the law says that a full refund must be given within 14 days. There's no obligation to pay compensation on top of that, but you do have to give the refund. And obviously that's what's created the cash flow crisis for many companies who paid suppliers, but effectively at a bit of a low point in terms of their own cash reserves. So the Commission has tried to support industry by making the following statement, which is that having regard to liquidity issues, travellers should consider accepting a delay or credit note, a refund being given if the voucher is not used. Now that is sort of helpful, but it's important to remember that is guidance. It's not legally binding. It's come from the Justice Directorate of the European Commission. So it's a response to the lobbying that has gone on. It's not actually a change in the law. But having said that, a number of countries have responded to that either by reiterating that guidance or by putting specific financial measures in place to support industry. So although we're talking about the UK today, I'll just mention for the sake of it that France, Italy, Belgium, Spain, Germany, Netherlands, Portugal and Denmark have all introduced schemes now. There is significant lobbying going on to get the UK to follow suit, to at least acknowledge the guidance to be given from the Commission. So as we stand today, the legal obligation remains to refund passengers. Given that we're talking about the UK, it's worth just mentioning the guidance that ABTA have issued as the sort of, I guess, the leading UK travel trade association. Their guidance is to talk to consumers, be open about what's happening, offer a postponement of the holiday, if people don't want to rebook, then grant a travel note, which will be financially backed by an atoll if the original holiday was up until the end of July of this year. It's not a particularly long period of time, but the protection is there for that limited time. The note or the credit note must be for the same value as the original holiday was and shouldn't include any additional offers. So that's the sort of pragmatic advice we're giving to clients at the moment, which is that you should offer that travel note. Obviously, that will give some credit to the business, but ultimately, even the Commission is saying that there does need to be a cash alternative if that voucher is not used. None of that is what the law actually says, and if you've got a particularly aggressive customer, they will be entitled to go to the small claims court or potentially even the High Court to get recovery, and you won't necessarily have a defence of that until the UK government brings in legislation, which it hasn't to date. So that's where we are today. It could literally change tomorrow, depending on how the UK government decides to respond. So just moving on quickly to the other side of this, which is recovering from suppliers we've paid out to airlines or hotels, and really effectively want that money back because the service isn't going to be delivered. Here we're not talking about consumer law, we're talking about business-to-business relationships. It's nothing to do with the package travel regulation. So it's really a question of normal contractual rules applying, and this is sitting down, looking at the contracts you have with your suppliers. You've got to say what governing law applies, what jurisdiction for dispute settlement. Is it litigation, arbitration? Is there other mediation schemes in place? A lot of talk in legal circles about force majeure and frustration. Force majeure is often seen in contracts and setting out normally some sort of suspension where specific acts of God have occurred. Sometimes they refer to pandemic, although that's relatively unusual. Very often they do talk about acts of government, of which there are many, as we've just discussed already. So the force majeure generally won't, it's not a get out of jail card free. It basically will normally say the parties will attempt to work around the problem, be a period of time in which to resolve the issues, and if it can't be done within, say, 3 to 6 months, then the contract will be deemed terminated. Then you have the issue of frustration, which is a legal concept, which is where it becomes impossible to perform the contract, and this will apply in many cases if you have a contract for a hotel for a set period of days in, say, April, and that is impossible to deliver because there's no way of getting to the hotel is closed, the staff are not available, the contract will be frustrated. That means the contract is void, and effectively both parties can walk away. And in both cases, if you've already handed over the money, that doesn't necessarily get you to where you want to be, which is to have your money back. You've still got the issue of getting the supplier to repay, which they may be reluctant to do. Ultimately, you're going to have to threaten legal action if they're not willing to make a payment voluntarily, or you can't come to an arrangement with them to make payment at some future date. So it is a question of basically looking at your contractual position, getting legal advice from the appropriately qualified lawyer, and taking it from there. Just a point on that, there is a lot of state aid going on, pumping money into particular sectors and the airline industry in some countries. So where you know that's happened, you know there is money available. It may strengthen your case to then say, look, we know you're getting support, so you need to pass that on, guys. Just a brief word about insurance. I would say our insurance lawyers are probably the busiest in the firm at the moment. Everyone's looking at their contract, seeing if this is going to give them some respite from the financial difficulties. Where consumers have insurance, generally speaking, the insurers will say, if you can recover from the tour operator, then we're not going to pay out. And as I've said before, technically they can recover, so it's quite hard for customers to get a refund from their insurance provider. B2B insurance, even where you have business interruption cover, normally only covers property damage as opposed to this sort of financial loss. So again, it's quite hard, quite unusual for it to be applicable. But it does sometimes happen. For example, you may have read about Wimbledon being cancelled. They had specific pandemic insurance cover, and they put a claim in for the £100 million recovery, which is, seems to be a valid claim. But insurance policies, if you do have them, please check what they say. They may well provide you some opportunity to recover. I was going to talk about employment. I think Jonathan covered that all very well. There's nothing more to say on that. Likewise on rent, payment of rent and rates. I would say there is an interesting legal debate being had at the moment as to whether, if you're renting a property and effectively you are unable to access the building, for example, you may have a travel agent based in a shopping centre, the shopping centre is being closed as a result of the COVID-19 advice, that effectively you're then not being given access to the property which you're renting. That may give you an argument for frustration and allow you effectively not to pay the rent. Those cases aren't in court yet, but there will be litigation on this undoubtedly. So aware of time, I'm going to stop there. Lots of interesting issues. Hopefully that's been helpful, and I'm very happy to update ETOA, Tom, and the membership on any developments. Thanks very much.
Neil, thank you very much. That was very concise and to the point. One of the problems we've got governing cancellations is that we have been asked by a number of people to provide a summary of what is happening in Europe. The difficulty possible to summarize what's happening in Europe. They're doing it individually, country by country. We will try and get some sort of summary up in the next week or so. But thank you very much. I'm going to come to questions at the end. Those of you looking at the clock, I can reassure you that we will overrun on time, but I don't think anybody's got many pressing engagements elsewhere, but we'll find out if you do or not. Thank you very much. David, I'm going to hand over to you to talk about taxation.
Okay, thank you, Tom. Okay, so, well, we are short of time, as Tom just said, so jumping straight into the first subject, the VAT deferral. This refers to an announcement by the government 2, maybe 3 weeks ago now, that for payments due between the 20th of March and the 30th of June this year, although the VAT returns themselves still must be submitted by the normal deadline, any payments shown as due on those returns can be deferred. It's automatic, no permission is required. Just to see how it would work, really, I did my own VAT return this morning, and having done so, the online account shows an amount of VAT is being owed, but with a statement saying you owe nothing at the moment. So you can still make the payment if you prefer, but if you choose not to, there will be no questions asked. You simply don't pay. There will be no interest, no penalties on the late payment of what is due. It does, this is my understanding, but it does only apply, I think, to amounts shown as payable on a VAT return and a current VAT return as well. So if you are late in submitting a VAT return, i.e. one for which the payment is not due between the 20th of March and the 30th of June, I don't think technically this applies to you. And when the return is submitted, HMRC would expect the tax to be paid. Equally, if you owe an amount because HMRC, for example, have assessed due to the discovery of an error, or if you've made a voluntary error and correction disclosure, then I don't think you would automatically get the deferral. Having said that, and going back to one of Jonathan's points earlier on, there is a time to pay system. It's existed for many years. In the past, it has been quite onerous in terms of having to demonstrate to HMRC that you have basically exhausted all other options. You've tried your bank, you've tried your shareholders, whoever it might be, and drawn a blank. I understand that now it is very much easier, and a short delay, at least, can be agreed quite readily. So if you are looking at a VAT assessment which you cannot pay, don't worry too much. Try HMRC on the time to pay line using the number that Jonathan had on a slide earlier on. My final point on this, and again, there's some uncertainty about this. I should say that everything on the VAT deferral is really summarised in a very short piece of guidance from HMRC. When they first publicised this, it stated that the deferral was only available to a UK business. That has now changed. So it talks about it being available for UK VAT registered businesses, which can be interpreted, I think, in two ways. Either any business which has a UK VAT registration, or a UK business with a VAT registration, and it makes quite a difference. I don't know of any non-UK companies who have submitted a VAT return since this was announced to see what happens. I know we do have at least a small number of non-UK businesses on this webinar. I think there's a decent chance, despite what it says on the slide perhaps, I think there is a decent chance that if you owe VAT on a VAT return, you won't actually be asked. But until HMRC clarify that point, or you go to put the return in, I'm not sure that we will have any certainty on that. Okay, if we could move on to the next slide, please. Final slide on the deferral, starting with an important point. If you are owed money on a VAT return, then it will be paid to you. Equally, any other valid claims made to HMRC, a correction, for example, to previous declarations, will be paid. This is all, of course, subject to normal HMRC review procedures. But if you are in a position, and I know many ETOA members are, where a typical VAT return is seeking a repayment of excess input tax over output tax, then the repayment will be made in the normal way. If you pay your VAT liability by direct debit, you need to cancel it. If you submit a VAT return, it shows a payment and you have not cancelled the direct debit, HMRC will take the money in the normal way. So if you're affected by that, please do cancel the direct debit. The final point on the VAT deferral is just to refer you to the HMRC guidance. It is short, it's straightforward, it is updated on a fairly regular basis. So if you want to check the latest, the link shown on that slide will take you there. The next point is making tax digital. Now, this is not a payment deferral point, but many of you hopefully are aware that that making tax digital for VAT came in at this time last year. Phase 2 was due, or is due, to come in this year on either the 1st of April, May or June, depending on your VAT period. There's nothing official on this yet, but it is widely expected or understood that HMRC have decided to defer this second stage for a year. And formal confirmation of that should be released fairly soon. Stage 2 concerns the need to have different parts of your digital VAT accounting system linked digitally to fully automate the process. For a lot of people, I know that this stage 2 was proving more problematic actually than stage 1. If you're within that, then watch out for this announcement. It'll give you a year's extra planning time to get that in place. Okay, and if we could move on again, please. So, many ETOA members sell travel packages on a wholesale basis. Certainly most of you are aware of the UK interpretation of those rules, which state that in normal circumstances, no VAT is payable when selling such a package. We do still come across companies in this sector from time to time who are unaware of that. If you are not applying this beneficial VAT position, you really need to, particularly at this time. In the right circumstances as well, the beneficial treatment can be backdated and a repayment sought potentially for 4 years worth of overpayments. And for businesses struggling at the moment, any in that situation, that could be a lifesaver. It applies also to non-UK businesses. You do not need to be UK incorporated or established to enjoy that rule. Any wholesale supplier of travel packages, wherever they are in the world, is entitled to apply the beneficial UK interpretation to their UK tours and seek a repayment of VAT. So again, any of you listening who think you may be affected by that, please do look into it. I'll say no more now because I suspect it's not an important point for that many, but it could be a lifesaver for a small number. A very, very obvious point, if you expect to be in a repayment position, get your VAT return in as soon as you can do. You do not need to wait until the official deadline. The system is open already for March returns, for example, and very obviously the sooner you get them in, the better. And if HMRC are reviewing it, if you've got it in quickly, the chances are it'll be reviewed more quickly, simply because most people send their returns in late, and you then enter into a queue of HMRC reviews. Most ETOA members don't use the tour operators margin scheme, at least not for the main part of their business, but it is an issue, so just a couple of points on this. As you will be aware, in the UK, the scheme runs on a financial year basis. There is a single calculation at the end of each financial year. Annual adjustments often create a VAT repayment. You paid too much provisionally during the course of the year. That could be a good source of cash flow at the moment, particularly perhaps for financial years which are ending around about now. The effect of the last month or two may well have suppressed the margin for the year, making it more likely that the annual adjustment will lead to a repayment. If you're in TOMS and you use the UK transport mitigation arrangement involving the transport company, you will be aware that a feature of that arrangement is the making of a management charge by the tour operator to its own transport company. In the current circumstances, I'm not sure how HMRC would react to this, but I know it's being discussed by a number of people. The deferral would mean that the tour operator charging the VAT may not need to pay it, but the transport company incurring the same VAT as its input VAT would be entitled to a repayment. So what would ordinarily more or less be a payment in and out at the same time does, just for this year at least, create possibly a timing benefit. Okay, and again, if we could move to the next slide, please. To finish off, I just wanted to say a few words on cancellations. Unfortunately, of course, this is probably the question I'm asked more than any other at the moment. For many, many years, the position in the UK, and I would stress this is a UK position, it's not necessarily the same in other countries, but for many years it was accepted that cancellations were not subject to VAT, simply because VAT, as far as services are concerned, is a tax on services performed, and it was accepted that where there's a cancellation, there is no performance of the service, and therefore nothing ever happens to create a VAT liability. So forfeited deposits and similar after the cancellation were not subject to VAT. Unfortunately, HMRC changed their view just over a year ago and stated then that they expected hotels and other similar suppliers to account for VAT on all deposits and other advance payments upon receipt, and only to adjust the VAT which had already been declared upon cancellation if the amounts were actually refunded back to the client. So any deposits or other payments retained by the hotel or other suppliers remained subject to VAT. That was the change in their policy. For tour operators accounting for VAT within TOMS, it was accepted that this wasn't in fact the correct position, provided that the tour operator had opted to use the departure tax point within TOMS, which the vast majority have always done. For the very obvious point that a cancelled holiday never departs. There's no departure, therefore the point at which the TOMS VAT is due is never reached. Accordingly, deposits, other payments in advance, and indeed any subsequent charges as well, are simply never subject to VAT, and the cancellation doesn't change that. And again, if we could move on. But whilst that agreement is extremely useful for tour operators that use TOMS, for many ETOA members, of course, that's not the case, and therefore the agreement doesn't apply. However, as I think most of you at least are aware, the supply of a wholesale package usually is not subject to VAT. That means that advance payments are not subject to VAT when received, and they do not become subject to VAT upon cancellation. So some good news, at least, in that particular sector is that forfeited deposits, other payments in advance are not normally subject to VAT. And furthermore, any additional charges that may become due at the time of cancellation are also not subject to VAT. But as a general rule, of course, the tour operator putting such a package together is entitled to recover the input VAT on the costs in the UK of a tour, and exactly the same is true of VAT charged on suppliers' cancellation charges. So until a year or so ago, hotel costs, for example, in the event of a cancellation, would not normally have been subject to VAT, but they may very well be now, particularly if they're not being refunded to you as the tour operator. So watch out for this. You may find, and you probably need to ask the hotel about this, but you may well find that a charge that you're paying to a supplier actually includes VAT. And if you can obtain a VAT invoice to demonstrate that fact, then you will be entitled to recover the input VAT. So it doesn't matter that you're not accounting for VAT on your own cancellation income. If VAT is charged to you by, let's say, a hotel, you should be able to recover. That's the situation for a package. If you're selling on a wholesale basis standalone supplies such as hotel onlys, then unfortunately things are not as good. We would expect the HMRC new policy as of last year to apply in these circumstances. So upon the receipt of a deposit or other advance payment, HMRC, assuming it's a UK hotel, would expect UK VAT to be paid on the amounts received, and you should be issuing a VAT invoice to your client for that as well. The only situation within HMRC's policy, in that situation that you would not be liable for the VAT on those amounts, is if you reimburse the amounts to the client upon cancellation. Again, the hotel cost, the cancellation cost to you, in principle, is eligible for recovery, provided, as always, you hold the required evidence that the hotel or other supplier has indeed charged VAT or accounted for VAT on that amount. Okay, I think I'm finished. So, Tom, back to you.
Thank you, David. Thank you so much. As ever, I'm very conscious that we're now over time. We will carry on until we're finished. I'm going to hand over to Kurt. I think it's quite important after such a detailed set of presentations on practical measures which the government has extended to the industry for people to understand what the dialogue is like between the industry and government. And Kurt runs the Tourism Alliance, which is the UK, well, as the name implies, is the UK body, which is the voice of tourism in the UK, and which speaks to government. And I thought it'd be quite interesting for Kurt to run through some of the arguments that are taking place. I'll hand you straight over to Kurt. Kurt.
Thanks, Tom. If I could have the first slide, please. Great, thanks. I think as way of an introduction, it's worth running through a few things first. As you'll probably know, COBRA is in charge of the government's response to this crisis. So COBRA is made up of senior cabinet members as well as some officials such as the chief medical officer and the chief scientific officer, which is why you see them on TV every night. Underneath COBRA, that's the group that comes up with a strategy and devises the major decisions. It meets on a as-need basis as the situation evolves. But on the day-to-day side, there is actually a group underneath it called C19. Now, C19 is the group of senior cabinet members who are split up into 4 groups. So there's health, public services, the economy and businesses, and foreign relations. So each of those 4 subcommittees has a senior member of the cabinet. So Hancock for health, Gove for public services, Sunak for economy and business, and obviously Rab for foreign relations. So they meet on a daily basis and take the strategic decisions that are decided by COBRA and implement them in their area. So beneath those, you actually have all the ministers and the government departments feeding into one of those 4 groups. And the main feed into the economy and business group is through the Tourism Industry Council. So this is where the tourism industry really feeds into government. So Tourism Industry Council is coordinated by DCMS. It is chaired by the Tourism Minister, which is Nigel Huddleston, and Simon Vincent, who is the CEO of Hilton. And it comprises 21 trade associations and large businesses within the sector. Its job in this is to identify and report key issues impacting on the tourism sector. So it relies on its members and other tourism trade associations to feed in particular concerns, where there is a gap in government guidance, where there is a real problem happening that the government needs to sort out. And then that's fed through to the Economy and Business subcommittee of C19. That's how the system works. If I can have the next slide, please. And then underneath this kind of more strategic side for the industry of feeding through the problems and getting the government to sort them out, there is a group called TIA, which is the Tourism Industry Emergency Response Group. Now, this is a lower level group which is coordinated and chaired through Visit Britain as the National Tourist Board. It comprises about 25 key tourism trade associations and businesses, and also includes DCMS officials and invitees from other government departments who will come along and basically, the idea is to share the intelligence on impacts and support needed within the industry at a lower level, and get the officials within DCMS to then go off, try to find answers to the questions on clarity, trying to get decisions from other government departments to provide further information where it is needed to support tourism businesses. And if I could have the last slide, please. These are the issues that, well, some of the issues that we're trying to deal with through TIA and through the Tourism Industry Council at the moment. One that's been alluded to earlier is business rates. Now, in the guidance that was published by government, tour operators weren't listed explicitly. However, there was a paragraph in the guidance which said that it wasn't an exhaustive list of businesses that this relief applied to, and that councils were able to apply the relief to other businesses that were similar or were broadly similar in vein to the ones listed. Now, as part of that, I've been working with Tom at ETOA and Joss at UK Inbound, and we've got the Local Government Association to release advice to councils to say, in their opinion, tour operators are broadly similar to the other businesses listed in the guidance, and therefore they should gain business rates relief. Now, this is just advice from the Local Government Association, but there is no particular reason why the local, or each individual local council shouldn't adopt that advice from their national body. The other reason why they shouldn't not adopt it is that the government will give full rates relief to the council. So if you're having problems with your council adopting tour operators into their local scheme, let Tom or myself know, and we will provide you with the information that you need to support your claim. And if you get the council to get you onto their local business rates relief scheme, then you automatically become eligible for the business grant if you've got a rateable value of under 51,000. Other issues that we're dealing with at the moment are problems with the job retention scheme and the self-employment support. This is particularly relevant to tourism businesses for a whole range of reasons, for a lot of small businesses where the director is otherwise self-employed, job retention scheme for seasonal workers who weren't on the books before the 28th of February. Those type of issues we're trying to sort out at the moment. As mentioned by previous speakers, retaining liquidity in businesses is a huge issue at the moment. So package travel regulations and insurance issues. Also trying to figure out the implications and get guidance on what businesses should do in light of the FCO guidance that came out over the weekend saying that people shouldn't travel overseas indefinitely. Now, what does that mean for forward bookings, and what does it mean for companies trying to get orders on the books for next year? And finally, what we're doing a lot of lobbying on is actually how to preserve businesses and the infrastructure for recovery. So when this is over, and it will end at some stage, that businesses are actually up and ready to go the moment the restrictions are withdrawn, and we get a shorter lag period as possible. So if there's anything you can think of that would further help businesses during the recovery stage, please let us know. We'd like to feed that in. As with any other impacts or suggestions that you have, keep feeding them in, because we are plugged into this national network. Thank you very much.
Kurt, thank you very much indeed. I think if I can get the other speakers back up, we've got a few questions to ask. One of the things while this is happening, I just want to stress to everyone, we've got a coronavirus page on our website at etoa.org, where we've placed lots of information governing coronavirus with different regulations throughout Europe. Someone's got their microphone not on mute. You can mute your microphone, I'd be very grateful. Unmute it when you want to answer the question. Can I just ask Jonathan very quickly, we've got a number of questions governing furlough workers, and I think the most pressing one is, what is it can they do? I mean, we've looked at a situation where we've got an industry in crisis. Several companies are facing dramatic difficulties when it comes to running their business, and they're going to struggle to hit payroll, there's no doubt about it. So they're asking some two pressing questions. One is, when are they going to get paid by the government? We know that we're going to file for the furlough grant at the end of April, but when are they likely to see the money coming into their cash flow? And the secondly is, can they get their workers to do anything? I mean, you've said they cannot do any work whatsoever, but they clearly can volunteer, they can do training. Are there any sort of statutory things that they're obliged to do?
Hi, Tom. Well, I think the first one is the golden question, isn't it? When? Well, we don't know. As I said at the beginning, the portal will come live later in April. You have to imagine almost like at least 3/4 of the companies in the country are trying to load their data at the same time onto one website. And it's not an ATM money. You're not going to put your data in and money's going to roll back into your bank account immediately. So government is saying April. Personally, I'll be amazed. I think companies will be funding April salaries and getting money back hopefully early May, if they can get money back in April. So that'll be 2 months out, March and April, before you get any money back. The government's saying otherwise, but let's see. I think on what you can do, furlough means you can't do anything at all. You're effectively laid off. So there is I believe, and Neil might be able to answer this in more legal terms than I can. You can do training for the company. You can't volunteer to do company work. You can volunteer to stack shelves or to drive people around and food supplies. You can't volunteer for the company itself. And I've heard, someone was telling me this morning of companies that have said, we will furlough you, but we expect you to do everything you would normally do. That is clearly fraudulent, right? And in this day and age, employees are going to shop their employers. And remember, as employers, you are hoping the government's going to give you your money back. If they get a whiff that you're doing something incorrect, they're simply not going to make the payment, and I expect then it's game over, isn't it? So I think there are unscrupulous employers that are pressurising employees, but effectively you should be sitting on your couch doing nothing if you're an employee for the company. The problem with travel is you've got the travel industry doing masses of work on processing refunds which don't generate revenue for the company, but they can't be furloughed, so they're absolutely in a quandary on it, and maybe Kurt's lobbying on that basis as well.
Kurt, do you have any angle on that? I mean, there is a lot of talk in the tier group about this, isn't there?
There is. Just to reinforce, you cannot volunteer for your own business. I've heard of a number of businesses having a look at swapping staff. So our staff go to you and volunteer in your work, and your staff come work for us. Well, volunteer for us, and we see if we can continue on. But one of the interesting things that's come up is that, as it says in the rules at the moment, you can do some statutory work. Now, whether processing payments under the package travel regulations constitutes doing statutory work, because it has to be done, is something that we'll be certainly taking up with government.
And thank you. And just to make it absolutely clear, you've got to treat these people as employees, and you've got to pay them, then do the normal pay run. The way it works is that you pay them as normal, but you reclaim that money starting at the end of April is the principle, isn't it?
Yeah, absolutely. And just to remind people as well about redundancy, you've got to treat people fairly. If you've got more than 20 employees, you've got to go through a consultation process and the like. This is simply for a scheme for staff that would otherwise have been made redundant because there's no work, to keep them on the books, and government will effectively fund them rather than just have gazillions of people signed off. They're laid over. They're not workers at home getting paid. They are effectively non-workers. They're in hibernation.
Right. Thank you. Kurt, has there been any reactions to the Foreign and Commonwealth Office statement over the weekend, where they've just announced that all foreign travel should be, I forget the actual phrasing, I'm slightly wrong-footed here, but they've effectively discouraged people from making any forward bookings at all for foreign travel. Is that correct?
Yeah, it's basically the advice not to travel unless necessary is indefinite. So there is no end period for that advice, which puts everyone in a difficult situation of knowing where they stand in terms of providing refunds, or even booking new business. Can you book anything, even if it's 10 years in advance, if the travel advice is that you shouldn't travel indefinitely? So again, a lot of queries coming up on this, and it's one of the main issues we're trying to figure out over the next couple of days.
Neil, are there any legal implications to that?
Well, I did see some press reports over the weekend that there were companies, certain airlines were taking bookings for flights in May, which sort of could put them in a pretty difficult situation given that FCO announcement. It's their own predictions to whether it's really the right thing to do to be taking money from people that you may not be able to perform the service you're being paid for. But obviously, they're going to be in breach of contracts if they can't deliver, as well as just creating further bad PR for themselves in the long term. So it's a decision for each company to take. Obviously, to say we're not going to sell any more business however far ahead is not the easiest thing to decide as a business, but clearly I would have thought taking bookings for May has got to be reasonably high risk. There's no legal obligation not to do that. I'm just saying it's not a commercially wise thing to do, given that you may not be able to deliver service.
I hasten to add, we are taking bookings for City Fair in July. This is
well, July is another story. That's miles away.
but we've got I actually got a live question here saying that we're currently introducing a deposit payment system for customers making bookings on the website with the option to pay the balance at a later date. In case the customer failed to make the balance payment, could the deposit be forfeited? Or would any guidelines mean that this cannot be done and the deposit has to be refunded? I gave you the question verbatim.
Yeah,
Neil,
I mean, the law talks about a full refund, doesn't it? So I think the principle is that you can't say, well, if you're going to pay 50% deposit, and that's, the law doesn't specify what percentage deposit should apply. You know, if you as a customer cancels, you're entitled to charge a fee for that cancellation to cover your reasonable costs. But that doesn't apply where we've got these extraordinary circumstances scenarios that we're talking about now. So I think legally the position is that it would all have to be returned.
Just another quick question. They're flooding in. Jonathan, on the rate relief, the person here describes it as a bonus, but in England, is the bonus per property held by the business or per business? Are you allowed 51k limit per property or 51 limit gross?
Yeah, I think it's per property. So so we've got a client with 20 branches, and they'll be with probably 15 different local authorities. I think it's per shop. The rate certainly is per shop. I'm not sure about Kurt's, like I said, Kurt nodding. I'm not sure about the small business grants, but 100% business rates released for a property will be. Kurt?
It's both. It's business rates relief and the grant. As long as you've got a separately rateable property, it's one per property for each.
Right, okay. Right, another question. I've got the European Commission says we have to refund travel until the end of May. But what about the tour operator, I imagine organizer, wants to cancel for a departure in September or October? Do our sales conditions work? And can we keep the deposit, for example, if the tour operator do not want to postpone the tour because final clients do not want to make the travel experience anymore? I think, you know, what happens if you've got someone having paid a deposit, but they're now saying, well, we're not going to travel in September and we're never going to travel. Do they get their deposit back?
Well, I think that, you know, disinclination to travel is not justification. So the statutory protection wouldn't kick in, and your terms and conditions would apply. So you'd be entitled to you know, make a deduction for deposit if appropriate, plus any administrative costs that you've incurred in arranging the booking. So, you know, the customer's on a week, which is why the guidance to consumers is you shouldn't be cancelling holidays, because certainly out of the FCO guidance period, which I agree has just changed, but until the weekend, the guidance was anything after mid-April, you should be assuming that you may be able to travel, therefore you shouldn't cancel. But if someone's saying September, I think you still have a good case for saying, okay, things may have changed by then. We don't know for certain what position it's going to be. This is your choice. You can have some of your money back, but not all of it.
I'm just looking at another question here, governing incoming tour operators. They've obviously got a bunch of overseas clients who had to cancel at the last minute within cut-off periods or outside the cut-off periods, governed by with the contracts with suppliers. Do they have to? I mean, is there any obligation to repay them other than a moral one? Neil?
Well, that depends on the timing, doesn't it? I mean, if they've cancelled because of the impossibility of getting to the destination, then under the package travel regulations, they will have the right to the full refund.
Yeah. Okay, I think this is so complex throughout Europe. This is something we're going to be exploring again and again as the days roll by and we're sitting not under furlough but under lockdown. I think I'm very conscious of the fact that we've now gone through to 4:30 for something that was supposed to finish at 4 o'clock. I just want to bring David into the conversation, just to earnestly urge people to mark what he said about the special scheme for tour operators if you're a wholesale tour operator, and the transport company scheme if you're a non-wholesale tour operator, to look at that extremely carefully. Is that the case, David? You would say that this is something you...
Absolutely. The difference between the various approaches that people take, there are still UK wholesale suppliers who account under TOMS, which is not wrong as such, it's just not the best approach. And those who use the preferred approach, which is to pay no VAT at all on a package sold to a non-UK principal client, or some other variations on those. The differences financially are huge. And we've seen refunds for previous 4 years run into many millions of pounds. So anybody who is not using the rules to their best advantage would really be advised to have a proper look at it.
Okay. All right. Final thoughts. I notice one of the correspondents says that Barclaycard has just cut the credit limit of their corporate card from £350,000 by 95% down to 7,500. I find that fairly shocking. Not, of course, that the tour operator was using it to factor a debt at all, but it's quite startling. This is some of the pressures that we're all facing. Well, ladies and gentlemen who are still with us on the webinar, and I think we've still got nearly 180 people watching, thank you very much for your attention. This is going to be recorded. Do look at the ETOA website. We've got tons of information there. For those of you interested in Spain, we've got a webinar, and you should be receiving interest if you've got a declared interest in Spain. We're having a webinar in Spanish at, I believe, 10 o'clock in the morning. You should be receiving an invitation for it, and information will be on the website in due course. Thank you very much, and thank you very much to Jonathan Wall, Neil Baylis, David Bennett, and Kurt Jansen for taking part. Thank you, everyone, indeed. Bye-bye.
Thanks, bye-bye. Thanks, Tom.
Okay.